So welcome to today's presentation. My name is Peter Yusuf, Senior Market Analyst at IronFX. We're going to be mixed technicals with us today. And what you're having in front of your screens right now is Euro USDs for our chart. By the way, feel free to add in the comment section any chart you would like to have a look at, and provided we're offering it. If we don't make it today, we'll definitely come make it tomorrow. Now, for the time being, we note that Euro USD has dropped and remained in a sideways manner below the 1.0615 and above the 1.0460. Definitely the S1 has to be turned into a resistance line. Actually, it could edge a little bit higher. Give me a sec, just to better reflect the peak here. And that would be the 1.635. Let's go hunting for a new ultimate support line. Let's add also some toolbars. And unlocking the chart, moving back, way back. There's this peak is true here, but in my opinion, that's way too close to the S2. So moving it a little bit lower. This was also a very nice support level. And green, 1.06, 1.016. Let's readjust the chart. Let's rearrange and correct the content of the labels. The S2 being placed now at 1.0315. The S1 at 1.0460. The R1 at 1.0635. The R2 at 1.0770. And finally, the R3 at 1.0935. So the movement is in a sideways direction. That's pretty clear. And we note that the upper and lower boundaries are set, in our opinion, by this peak here to the upside. Practically the 1.0635 resistance line is the upper boundary, while the lower boundary is marked by this true here. So the 1.0460 support line seems to be the lower boundary. Overall, we tend to maintain our bias for sideways motion to continue, given also the RSI indicator, which remains just below the reading of 50. It's currently at 46. I would mind that it tends to imply a rather indecisive market here, which exactly could allow the sideways motion to be maintained. Also note how in orange line, the 100 and the green line, the 50, moving averages have flattened out, also tend to imply some sideways motion. On the other hand, the 20 moving average has started to edge lower given the wide drop once, twice, yet seems to be missing out on the recent stabilization. Overall, the sideways motion seems to be continued. Should the bulls take over, we may see Euro USD rising, breaking the R1 1.0635, and we set as the next possible target for the bulls the 1.0770 level, which provided resistance here. While on the downside, should the bears take over, we may see the S1 be broken, and the pair may start aiming for the 1.0315. Now on the fundamental side, okay, on a more general fundamental comment, overall the market seems to continue to be moved, or at least is highly worried about the Israeli conflict and whether an escalation is possible or not. And that tends to be directly linked with the possibility of the Israeli forces actually entering ground in Gaza, which, if so, could increase the casualties among civilians, especially, and that may escalate the conflict, as we may see neighboring countries, Arab countries, actually, I wouldn't say directly taking part in it, but definitely the support for the Palestinian side may intensify. And that could be expressed in a number of ways. Let's not forget that we're talking about oil-producing countries, especially when we're talking about Saudi Arabia, which had a keen and intense interest in the issue. On a more specific side, the conflict, or if you prefer, a possible escalation of the conflict, could provide safe haven inflows for the USD side of the pair. And in that case, we may see Euro USD weakening and the bears taking over. On the other hand, on the Euro side, I have to note here a couple of issues. We definitely would be noting the release of, the meeting of Eurozone's finance ministers. It's an interesting meeting as the agenda includes the idea of the creation of union in the Eurozone. And actually, it's in the zone as such, not the EU, which is wider. Should there be indications about a possible fruition of such a market union, that could provide some support for the Euro side of the pair. I would also be noting the elections in Poland, which took place yesterday. Now, despite that not having a direct effect on the Euro side, given that Poland is not in the Eurozone, it has zloty, but still, the fact that the Polish opposition party seems about to win, it's quite uncertain just yet, but that seems to be the case. Should that be the case, we may see the euro getting some support, as that would imply less frictions within the EU as a bloc and on a political level. So I would expect, though, any market reaction to that to be rather muted. It's a little bit distant. It's political. It may have a low volume effect on the euro. Other than that, we have only very few high-impact financial releases from the Eurozone this week. I would be noting German SF indicators. I think that the headwinds faced by the German economy are interesting for the whole area, given Germany's role as an economic powerhouse in the Eurozone. And other than that, I would also be noting the final HIC period of the Eurozone for September. And from France, we're getting the business climate for October. Eurozone's final HIC period may not have an effect on the euro as such, given that the preliminary release may have absorbed any, or at least most of the market shocks. And usually the final release tends to verify the preliminary one. So no surprises expected there. Most probably the HIC period on a year-on-year level is to remain unchanged at 4.3% if compared to the preliminary release. More or less, I wouldn't expect anything major there, but we would have to note it on a macroeconomic level. Okay, let's have a look at GBP/USD. Definitely that's an interesting question here. I think we could recalibrate cable a little bit. Definitely we will be needing a new ultimate support line, but I would be noting, or I will be lowering the R1 to meet this level here, this peak here. I think that would be better reflecting the current price action of cable, and that's being set at 1.2325. Let's go back, finding a new ultimate support line. This show here is quite interesting. Seems actually pretty good. It's quite close to the S2, but look at the validity of this two. 1, 2, 3 touches and one stabilization here. Let's have a look if we can find another verification for the S3 we have just noted. Could go an edge lower. I think this is clearer. Yeah, I'm keeping that. Let's readjust the chart. Let's correct those to the labels. Starting with the S3, which is being placed now at 1.1760. The S2 at 1.1925. The S1 at 1.2065. The R1 at 1.2325. It's a pretty wide corridor here. 1.25 off for the R2 and 1.2645 for the R3. That's it. Let's lock everything in. I would definitely highlight the wide sideways motion of the pair. Practically allow me to highlight it. Insert. And we tend to expect the sideways motion to be maintained. Mind you though that the RSI indicator is a little bit low, it's 41.5. Nothing much just yet, but a small warning here about a possible downward movement should be in place. I would be noting that we had discussed with the colleagues up in research the idea of a downward trend. However, that in my opinion is not valid, and that's being based practically on two elements. The first element is that, okay, we had lower peaks and lower troughs, but it was broken during today's Asian session. And the second element is the fact that I would require the pair to break the S1 1.2065 for any bearish outlook here. I would require a lower trough than this one. So for the time being, a bearish outlook is not in our plans. For a bullish outlook, I would require a higher peak than this one. So the price action has to break above the R1 1.2325. On a fundamental level, on the GBP side, I would be noting that we have a lower frequency of high impact financial releases from the US. And that may more or less allow cable to take the initiative in cable. May allow the GBP to take the initiative in cable. And the reason I'm saying that is we have a number of high impact financial releases coming out of the UK this week. I would make a start with the UK employment data, which are due tomorrow during the European session. And I would continue to also note or if I highlight the release of the UK CPI rates for September, as well as the UK retail sales growth rates at the end of the week. So that's expected to possibly increase the interest of the markets on the pound. And maybe we may see the pair being more GBP driven than before. I wouldn't say that the pound's going to be leading the way total here. No, USD releases definitely have their own interest, but we may see more influence in cable from the side of the pound. Okay, let's have a look at USD/JPY. Once again, in a clear sideways motion, yet note how the pair is quite high. I think if we drill into the daily chart, it will be more obvious. If we were discussing a longer trend, then one could discuss something like this. Touch, 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 break, break, touch, 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 touch. But for the time being, I still maintain a sideways motion bias here. Back to the forward chart. We expect the pair to remain in sideways motion between the 149.90 resistance line and the 148.40. The RSI indicator remains quite low. It's at 55, not quite low, but pretty near to the reading of 50. It's at 55 right now. So that tends to imply more or less a rather indecisive market about the pair's next direction, which could allow actually the sideways movement to be maintained. Should the bulls take over, I would require a higher peak than this and this one. So practically the pair has to break above the 149.90. That would be, in my opinion, the first possible signal of an upward movement and start aiming for the 151.90 yet. At this point, we have to note that the 151.90 has been a peak for over 20 years. Allow me to show you. Moving to the weekly chart. Note how this level was reached practically in October 2022. Let's have a look. Yeah, 16th of October 2022. There was no such indication, even if we move to a monthly basis, which goes back all the way to 2008. Let's unlock it. Even back to 2001. Practically, in my opinion, the R2 marks not an all-time high, but definitely the highest level which the pair has reached in over 20 years. So that's an element which may cause some cold feet for the bulls. And definitely we are near, if we are not already in, a possible market intervention zone of BOJ. Mind you that in the last market intervention about 1 week ago, on the 3rd of October, right here, you can see the wide drop of the pair. That was the day when rumors say that BOJ or the Japanese government intervened in the markets to strengthen the JPY. So that's a level which has been marked as a possible intervention level. And most possibly we may see the bulls avoiding it, or at least respecting it. On the other hand, should the bears take over, say for example, if we see safe haven inflows for the JPY, mind you that it will be a battle between the US dollar and the JPY in case of an escalation of the Israeli conflict. Both currencies are considered to be safe havens. However, JPY, I think, has the strongest reputation. In that case, we may see it gaining against the US dollar and the pair may start weakening, dropping. Should the bears take over, I would expect the price action to drop, break the 148.40, break definitely the prementioned upward trend line, clearly, and reach the S247.50. The main element to keep an eye out for bearish outlook would be, in my opinion, the breaking of the upward trend line, exactly signaling an interruption of the upward movement. Yet we have to note that we had some such interruptions in the past as well. Fundamentally, the dovish stance of BOJ and interest rate differentials tend to weigh on JPY. So in the long trend, we may see the JPY continuing to weaken. But for the time being, we tend to maintain a bias for the sideways motion. It's a very short one. It's about 24 hours long at least. A bearish outlook, once again, would lead the pair actually below the S1 and also below the upward trend line. Let's have a look at the Aussie. Okay, AUD definitely has moved below the S1, 0.64, so that should be colored in red. Let's go hunting for a new ultimate support line. Daily chart. Okay, we have a nice touch here. And a nice touch here. Zooming back out to the 4-hour chart, readjusting it. In green. That would be the 0.607. It's practically 100 pips below the S2. Starting with the R3, which is now being placed at 0.6610. The R2 at 0.6510. The R1 at 0.64. The S1 at 0.6285. The S2 at 0.6170. And 100 pips lower, we have the S3 at 0.6070. Locking everything in. We tend to maintain a bias for the sideways motion to continue, and we're basing that practically on two elements. The first element is the fact that the price action of AUD USD was unable to clearly break the S1 0.6285. And mind you, this is the second time within the same month where the specific support line actually is able to bounce or reverse a downward motion. You can see it once here, and actually you can see it for a second time here. Note that any downward movement has been interrupted. On the other hand, though, the pair seems to fail to actually gain traction and move upwards. It hasn't even, or if you prefer, it has even stopped aiming at the R1 0.64. On the contrary, it's looking on sideways motion. The RSI indicator has risen, implying that the bearish sentiment seems to be fading away. On the other hand, though, it remained below the reading of 50. And it's actually at 41. So there may be some bearish tendencies left here. Should not be underestimated. Once again, though, for the time being, we tend to maintain a bias for a sideways motion, and for a bearish outlook, I would require the pair to drop, break the S1 0.6285 clearly. I would require a lower draw than this one, and the pair to start aiming for 0.6170. On the other hand, should the bulls take over, which is not exactly with the highest probabilities right now, but it's still a possibility. For a bullish outlook, I would require the pair to break the 0.64 resistance line and start aiming for the 0.6510. It's a long, long way, and in my opinion, in the next 24 hours, with such low volatility, I don't think that's the case. But it's still a possibility and should not be underestimated. USD CAD. Oh, we have a movement lower here. Okay, definitely the 1.36 has to be switched into support line. And I'm going to be searching for a new ultimate resistance level. I think we have a good one here. Readjusting the chart. Our levels are a little bit narrow, I know that. But that's not my main concern right now. We're talking about the 1.3865. sorry, that should be 60. The R2 at 1.3775. The R1 at 1.3690. The first support line now set at 1.36. Second support line at 1.35. And finally, the S3 at 1.34. It's interesting how the support levels are evenly split by 100 pips. You can see the S3, then the S2 is at 1.35, 100 pips higher. The S1 is 100 pips higher than the S2. Okay, that rate changes a little bit, actually narrows a little bit in the coming levels. Yet I would note that the R2 could go a little bit higher, somewhere here. 1.3785. So, given the inability of the pairs to actually breach the R1 1.3690, at least breach it clearly and consistently, given also that the RSI indicator is actually running along the reading of 50, we tend to maintain a bias for the sideways motion to continue. But there has been a downward motion over the past, actually since Friday's American session. So some bearish tendencies may be present. For the time being, that does not seem to be the case. On a more fundamental level, we note that oil prices have risen. We see that later on. And that may be providing some support for the CAD should the bullish effect on oil prices be maintained, given that Canada is a major oil producing country, and any rise of oil prices usually tends to be directly and positively linked to the CAD as well. As for financial releases, I would be marking for the Canadian side of the pair. We have today's wholesale sales, which will be of interest for CAD traders, there for August. I think, though, the main financial release of the week for CAD traders is going to be Canada's CPI rates, there for September. And a possible slowdown could weaken the CAD somewhat. Now, should the pair reverse direction and enters a move higher, for a bullish outlook, I would require a clear break of the R1 1.3690, nothing less. On the flip side, should the bears take over, we may see the price action dropping, breaking the S1 1.36, and start aiming for the S2 1.35. Let's also have a look at WTI prices. Okay, definitely the R1 has been breached, and the commodities price is above $84.30 per barrel. So that's an issue. Let's readjust the labels. Done. Let's talk direction. There's an upward movement which is very characteristic of WTI's price. And on the fundamental level, market worries about a possible escalation of the conflict in Israel tend to provide support for oil prices. Mind you, though, that the price action seems to have stabilized somewhat. It's actually correcting a bit lower after hitting on the upper Bollinger Band, which was understandable. We tend to maintain our bullish outlook practically on two reasons. A, for any switch, I would require the commodities price to actually breach this upward trend line. But also note how the RSI indicator remains rather high. It's at 62.5, more or less implying that there's still some bullish sentiment left in the market for WTI. Should the bulls maintain control or regain control, if you prefer, we may see the commodities price breaching the R1 84.30 and start aiming for the R2 87. I would be noting here, though, that should we see further stabilization or a drop, especially if the commodities price action actually breaks the pre-mentioned upward trend line, that would be signifying exactly the interruption of the upward movement. And we would be switching our bullish outlook in favor of a sideways movement if and should WTI actually remain in the corridor formed between the R1 84.30 and the S1 81.40. So we're talking about a 290 pips distance here. 290 cents distance here. Should the bears take over, I would expect nothing less than the commodities price to breach the upward trend line, but also breach the S1 81.40 and start aiming for the 78.20. That's the level at which the rally began. So practically we have one test, and the second is the S2. It's a barrier for the time being. It's beautiful how the level actually reversed the downward motion. And even note how forceful the downward motion here was, and was practically stopped at this level. Okay, a couple of cents lower or higher, but it was stopped. Very interesting chart. Okay, let's have a look at gold, which had a remarkable rise on Friday. There you go. Okay, we have a couple of elements here which we should alter. Definitely the R1 and the R2 have to be switched into support lines as they have been breached. That's clear. And I would be noting also this peak as the new R1. Let's go hunting for a new ultimate, actually two new ultimate resistance lines for the new R2s and R3s. This is too close to the price action for my taste. I would require something higher. There's a clear peak here. And that's in red with a 1985. Next one may be a little bit narrow. Note all these levels here. I'm going to disregard practically this level, which was a former support line. I recognize that. But A, that's too narrow to the R2. Well, these levels are very interesting. 2015. We are adjusting the chart. Let's set the new labels, starting with the R3 at 2015. The R2 at 1985. Let's have a look exactly where this stands. $1,932 maybe. Yep. $1,900. $1,865. And finally the S3 at 1,819. Locking everything in. So we tend to maintain a bullish outlook for the precious metals price. I personally view the correction lower as just that. A correction lower which was caused on technical level, given also that the price action of the precious metal was able to breach above the upper Bollinger Band. Note how the volatility has widened the Bollinger Bands, exactly highlighting this increase in intensity. The RSI indicator has corrected lower, yet is still at the reading of 70. And in my opinion, that's indicative of a bullish sentiment in the market for the precious metal, which could drive it higher. Yet for a bullish outlook, I would require a higher peak than this one. So gold's price has to breach above the 1930 resistance line and start aiming for the 1985. On the other hand, should the precious metal remain in the corridor between the R1 1932 and the S1 1900, that would mean a sideways motion like this. While for bearish outlook, we would require the precious metal to drop, break the S1 1900, and aim at least for the S2 1865, a level that provides support beautifully here. So that should sum it up for the day. From all of us here at IronFX, best wishes for solid trading.
Everyone, my name is Emily and today we're going to talk about inflation. In a market economy, prices for goods and services can always change. Some prices rise while some other prices fall. Inflation occurs when there is a general increase in the prices of goods and services. It means you can buy less for €1 today than you could yesterday. In other words, inflation decreases the value of the currency over time. When measuring inflation, all goods and services that households consume are taken into account, including everyday items such as food and petrol, durable goods such as clothing, PCs, and washing machines, and services such as hairdressing, insurance, and rented housing. All these goods and services that households consume during the year are represented by a basket of items. Every item in this basket has a price, which can change over time. The annual rate of inflation is the price of the total basket in a particular month compared with its price in the same month 1 year earlier. In a healthy economy, annual inflation is usually in the range of 2 percentage points, which is what economists consider a signal of pricing stability. And there can be positive effects of inflation when it's within range. For instance, it can increase spending and thus stimulate demand and productivity when the economy is slowing down and needs a boost. On the contrary, when inflation begins to exceed wage growth, it can be a warning sign of a struggling economy as consumers' purchasing power will decline. Inflation impacts consumers most directly, but businesses can also experience it. As mentioned, when inflation rises too much and it is higher than wage growth, then households or consumers lose purchasing power as the prices of items they buy, such as food and petrol, increase. Companies also can lose purchasing power and see their margins decline when prices increase for raw materials used in production, such as coal and crude oil, flour, and steel. To respond to the rise in prices, companies tend to raise the prices of their products or services to offset inflation. This means that the products that consumers will buy will become more expensive. Statistical agencies measure inflation by first establishing the current value of a basket of various goods and services consumed by households, referred to as a price index. When calculating the rate of inflation over time, agencies compare the value of the index over one period to another, such as month to month, which gives a monthly rate of inflation, or year to year, which gives an annual rate of inflation. For example, in the United States, the Bureau of Labor Statistics publishes its Consumer Price Index, which measures the cost of items that consumers buy out of pocket. The CPI is broken down by regions and is reported for the country as a whole. Another measure of the prices that people living in the United States or those buying on their behalf pay for goods and services is the Personal Consumption Expenditures Price Index, which captures inflation across a wide range of consumer expenses and reflects changes in consumer behavior. Thank you so much for watching us.
let's get started. So sorry about that. I, for some reason, could not turn on my camera. Okay, but let's just get into it. So, as per usual, a risk warning and disclaimer first. Our products are traded on margin and carry a high level of risk, and it's possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risk involved. So do your own due diligence before investing any of your money. Hey, I'm Melanie, and I will be your speaker for today. I'm an investment analyst from Everest Virtual Group, who are finalists for Best FX and Equity Research in 2019 to 2021. So here's our agenda for today. We're going to understand what makes a valid trend line and trend channel, what exactly are breakouts and fakeouts, and we're going to look at some indicators to determine momentum and look at improving the probability of successful breakouts. Okay, so let's start off with trend lines. So here's what makes a valid ascending trend line. Firstly, they should be drawn from the bottom if it's an ascending line and not the top. Next, trend lines should have at least 3 significant touches, and 2 touches tend to be more coincidental, which is why we typically would recommend 3. So here are a couple of examples. Okay, you can see how significant exactly these troughs should be, or the swing lows should be, in order for them to be considered valid points on a trend line. Okay, here's another example, and here is an example of a descending trend line. So similarly to ascending, they should also have at least 3 significant touches, but for descending, they should be drawn from the top and not the bottom. Okay, here's another example. In this case, we have really nice 4 swing highs that touch our trend line. Okay, but 3 is enough. Here's another example. Okay, so here we've drawn out exactly how significant these touches need to be for it to be considered valid. And then we want to watch out for at least 3 significant touches, because then there could be a possibility that price would likely react off of that trend line again, which you can see is what happened here. Okay, so price actually reversed back to the trend line and is playing the reaction off of the 4th touch. Okay, now pretty straightforward. So let me know in the chat whether you guys think that this is a valid trend line or not. It's not. Yeah. Victor, yeah, trend here is down. Yeah, so it should be drawn on top. Yes. Okay, yeah, pretty straightforward. I think you guys have gotten it, so let's just move on. So now we're gonna look at drawing trend channels. So for trend channels, they require at least 4 significant touches. So 2 at the top, 2 at the bottom. And they don't need to be in consecutive order, like in this image here. Okay, so for example, over here, this is also consecutive, as in top, bottom, but it can also be top, bottom, or bottom, top. Yeah, so the order doesn't really matter as long as it's significant, swing highs and swing lows, and they touch your channel 4 times. Okay, this is an example of an ascending trend channel. Okay, now let's take a look at liquidity traps. Okay, so what exactly is a liquidity trap? So it's basically a situation in which monetary policy becomes ineffective in stimulating the economy, even when interest rates are near or at zero. So this occurs because people and businesses are hesitant to spend their money, even at low borrowing costs, leading to a lack of demand for goods and services. So in the context of trading, a liquidity trap can cause problems for market participants as it may lead to a decrease in market liquidity. So that basically means that it'll be more difficult for traders to enter or exit positions quickly and at their desired prices. So this can result in wider bid-ask spreads, increased volatility, and decreased market efficiency. So central banks actually try to address liquidity traps by using unconventional monetary policies. Okay, so some of these include quantitative easing. So they inject more money into the economy so that they can encourage spending. However, the impact of these policies on financial markets can be difficult to predict and may lead to unintended consequences. So here's an example of a liquidity trap. Okay. So firstly, we see price reversing at the swing high. Once price surpasses the swing high resistance, right, it clears the orders and then it drops below the resistance again. Okay, so another example here, price breaks out of the ascending trend line as well as the ascending trend channel. So it shoots out of it, clears the orders, and then at the point 1.04791, this swing high price reversed and it proceeded to drop back down. Okay. Okay, now let's combine trend lines, trend channels, support lines, pullbacks, and overlaps. Okay, here is just a checklist. Okay, so you can screenshot it if you want. I'm just gonna get rid of my face. When I was starting out with technical analysis, this checklist was really helpful for me. Yeah, but it's just a list of things to look out for. You can find this checklist and other tutorials on the forexarmy.com website as well. But basically, for this checklist, it just tells you that if you combine multiple technical analysis methods, your analysis would then be more accurate. Yeah, I'll just type into the chat. Just forexarmy.com. Okay, maybe I'll show you guys what the website looks like as well. Okay. This Forex Factory, sorry. Forex Army. This one. Okay, so actually it's theforexarmy.com. Okay. So here you'll find some trading guides. So we have guides on Fibonacci, support and resistance. We also have trading tools that you can download for free and just implement into your MT4. Okay. Yeah. So we have Fibonacci, how to draw it correctly, support and resistance, and a couple of MT4 downloadable trading tools as well. Okay. Let's see. So yeah, this really in-depth and really easy to understand Fibonacci guides, as well as some risk management techniques. So this is really important. Support and resistance. So all of these as well. Yeah, okay. You can go and explore this website on your own. Okay, so here's another checklist. So this is specific to playing the continuation. So you can play the bounce or reversal by firstly checking whether price respects the Ichimoku. Secondly, trend line, key horizontal support or resistance levels, any key Fibonacci levels that it is near. And these are the 4 Fibonacci techniques that we use. And where's the next key level that it might go? So you fine-tune these levels by looking for confluence areas. So confluence areas tend to be a mixture of Fibonacci levels as well as horizontal levels. So like your overlaps, pullback levels, as well as pivot point levels if you do use that indicator. So when you find a couple of levels that match up at the same area, it doesn't have to be a level, it can be an area. As long as it's close together, that's fine. Yeah, then that is more confirmation that your analysis is correct and that price is likely to be attracted to that level. Okay, so in this example, I have an ascending trend channel. Okay, and price is moving within the trend channel. So in this case, I'm playing the continuation, and the continuation in this case is simply an uptrend. Okay, and when I say bounce or reversal, I'm looking at price bouncing off of the trend channel, which you see over here. Bounce off it, it moves within the trend channel. So that's why we say continuation. Okay, next, another example, but in this case, it's a downward trend channel. So same thing, we are looking at playing the continuation. Bounce or reversal refers to price bouncing off of the trend, the sides of the channel, which you can see over here. And it happens multiple times in this chart. Okay, so if you were to put your entry over here and made a buy entry to this trend channel here, and then you did that a couple of times, it would have been really, like you would have made a lot of profit. Okay, now let's take a look at how we can play the breakout. So using the same checklist, is this the same checklist? Okay, not exactly, but looking at the same kind of indicators. Firstly, does price cross below the Ichimoku? So if price crosses below the Ichimoku, it suggests that the signal that Ichimoku is giving us is bearish. Do we have the Ichimoku momentum on our side? So is it bearish or bullish? Did price break any trend line? Basically, these 3 breakouts basically suggest that there is a change in trend. Okay, and then where is the next key level it could go to? Same thing over here, we are looking for confluence areas as well. Okay, playing the breakout. So first example here, I'm using a Fibonacci projection. So if you're not familiar with what a Fibonacci projection is, basically you're using the extension tool. If you're looking at TradingView, it's the Fibonacci extension tool, which has 3 points. So this is my starting, middle, and ending point. And in order to use this or to recognize that you can use it, we are looking for kind of a lightning bolt shape. So basically something like this, okay, and then it moves upwards. So, and for that, we use 3 levels, 61.8, 78.6, as well as a 100%. Okay. So I have a resistance level here. We have two swing highs, and then I have another, excuse me, swing high resistance here at 135.147. Okay, so from this level, price has broken out of this confluence area, this multiple swing high resistance. So it's broken out of it, so we're expecting it to continue to shoot upwards towards any one of these levels. Okay, and that's exactly what it did over here. So once price reaches our 61.8, we can expect it to continue, or once it breaks out of the 61.8, we can then expect it to continue to go towards our 78.6 level. Okay, and our 78.6 level is about the same level as the swing high resistance as well. So, yeah. Okay, now let's move on. So this is another example. In this case, we are looking at a descending trend channel. We're looking at descending trend channel firstly. Secondly, we are looking at this ascending trend line. But then we notice that price has recently broken out of this descending trend line, ascending trend line. So it's broken out of the ascending trend line, suggesting that it's gonna move downwards. Okay, so 2 points, descending trend channel breaking out of the trend line. Next, we have price moving below the Ichimoku cloud. So remember I mentioned earlier that if it moves below the Ichimoku cloud, then it's a bearish signal. So we have three indicators, graphical and indicator, a momentum indicator that tell us that price is going to be bearish. Okay, so then we can expect it to continue towards this swing low support level here. Okay, and you can see that it definitely did hit where we expected it to go. Okay, another example here. Price recently broke out of the ascending trend channel, so that's point 1. Point 2, price is currently at this 127.2% level. So here we have a Fibonacci extension. So, okay, let me just go to our Forex Army website. If you missed our Fibonacci series, not to worry, but that's basically where we go through all of the different techniques in detail. Hmm. Okay, we might not have that here. Okay, we have this. These are Fibonacci expansions. So they go from 0 to the negatives. And these also use that same lightning bolt shape as the projection. Okay, I think we don't talk about extensions here. That's so weird. Okay. Never mind. I'll just talk about it now. So for Fibonacci extension, we are looking at the above 100 range. So for the above 100 Fibonacci levels, we are looking at 127.2 and 161.8. Okay, and how you decide whether or not you want to use this level, you look for this shape, this like V shape. Okay, in this case, it's a little bit difficult to see because it's inverted. So it's inverted tick shape. But you can just imagine a Nike tick, just an upright tick. Yeah, so as long as the head of the tick is smaller than the tail and price retraces 100% of this initial shape, then you can go ahead and use this Fibonacci tool. Okay, so in this case, we see that price recently broke out of this ascending trend channel. It's also currently breaking out of this 127.2% level, Fibonacci level. So we're expecting price, once it breaks out, we're expecting price to continue to this 161.8. Okay, so 161.8 is also in line with this swing low support level at 0.66420. Okay, so we want to try and make sure that we line up Fibonacci with graphical levels as much as possible. And you can see here that that's exactly what happened. Okay, we see price break the level, the 127.2% level, and went all the way down to 161.8, just as we expected, caught our trade, and then shot back up. Okay, here's another example. So price recently broke out of this descending trend line. Okay. So using Fibonacci extension again, the same Nike tick shape, we can see price is currently breaking out of this 127.2% level. Okay, and we're expecting it to hit our take profit here at 85.724. That's in line with the 161.8% Fibonacci extension. Okay, and you can see that's exactly what happened here as well. So for our take profit, you can see that we have this 161.8 obviously, but it's also in line once again with a swing high resistance as well. And our buy entry, as you can see here, is also an overlap level because we have price reacting off of it from a swing low and a couple of swing highs as well. Okay, so that's all for my slides. Now I'm gonna go ahead and pull out some charts. So let me know in the chat if there are any specific charts that you'd like me to analyze. Okay, I'll just go ahead and look at gold first. Mm, okay, so let's start off with the higher time frames so that we get an idea of where prices are headed, just the general direction. Okay, we have 3 swing high resistances here, and we have price moving downwards. On our daily time frame, we have a swing, we have 3 swing highs that match our descending trend, line. Okay, so this is a valid trend line. Okay, and maybe I'll just place my swing first resistance there, and my second resistance here, or rather my first support here, and okay, so a good habit is to try and see how far back you can put your support and resistance levels. So the reason for this is because you want to see, it's easier to see how many times price has reacted off the level, so you know how significant that level is. And you can see that this level is pretty significant with price reversing off of it a couple of times. Okay, next we have another swing, another second support here. Or maybe closer here. Okay, yeah. So the reason why I chose here instead of there is because here we have many swing highs and lows. Okay. So here we are playing the continuation. Now that I have my Fibonacci levels, I'm gonna go ahead and add some Fibonacci levels to support my support and resistance levels. Oh wait, this is the daily time frame. Okay, I'm gonna analyze it on either the 1 or 4 hour time frame instead. Okay, so here's the 4 hour time frame. Let's see if we have a trend channel. Okay, no, we don't. Okay, but we can kind of, do we have a trend line? Okay, also no, because we have this area here. Okay, okay, we don't have any support, any trend channels or trend lines, but we will just go ahead and add some support and resistance levels now. Okay, so this is my first support. Okay, I'm just gonna make this a dotted line because price is super close to this level. But I want to highlight it because of this swing high here. Okay, and then a resistance here. And here. Okay, now let's add some Fibonacci levels. Okay, I can see that my 50% lines up with my first resistance. 50, 70, no. This is a little bit too far, but if your 50% is, like if you look at my 50%, it's kind of about my first resistance. So that's fine. Okay, next, let's add some Okay, I have my 100% lining up with my first support. Okay, but this is no longer valid because price has already broken out of the 100%. So even though it does line up with my first support, I can't use that anymore. Okay, so sometimes you do see some charts that are a little bit more difficult to find Fibonacci levels. Okay, I can see that my 100% lines up, and you can see this shape that I'm using for my projection. So I'm using a projection, as you can see my 61.8, 70.6, and 100, and also these 3 points. So I'm looking for this kind of shape here. Okay, so my 100% lines up. Okay, and again, the level, or rather the tool that I use is this one over here, the trend-based fib extension. Okay, I think that's all the levels that we have for now. Now let's go in with some indicators. So over here, we can see that maybe, okay, yeah, so we can see that this 50% lines up nicely with my first resistance here. Okay, and we typically will trade according to the trend. So here we see that price is moving upwards. So we're likely to expect it to move upwards to our first resistance once price actually breaks out of this intermediate level. Okay, so let's pull out some levels to support this. Okay, and you can see price is moving above the Ichimoku cloud. MACD is also giving us a bullish signal. So I like to use MACD and Ichimoku because at one glance I can see exactly what the signals are. Okay. Okay. RSI isn't really telling us much. Now let me pull out my exponential and simple. So I like to use these two because not only can I check each indicator at the same time, but also I can see that when there is a crossover, that typically suggests that that the trend is reversing, or that the trend is changing. Okay, so here we can see that currently there is no crossover between the two, and in fact price is moving above our SMA, simple moving average. So it suggests that price is gonna continue moving upwards. Okay. Okay, let me know if there are any other charts you'd like me to go through or any other questions. Okay, if not, maybe I'll go ahead and analyze DXY as well. Okay, just before the inflation reports are released this coming week, I think tomorrow. Okay, so here's our weekly time frame. We see prices generally in an uptrend. Okay, but there is a slight reversal over here. Okay, let's look at our lower time frames. Okay, so earlier we talked about trend channels and the breakouts of trend channels. So this could be a possible breakout of a trend channel because we have two swing highs at the top as well as two swing lows. Okay, so this actually could be an example of a breakout as well. Okay, so we're still generally bullish on our weekly and our daily time frames. Now, if we take a look at our 4-hour time frame, you can see this uptrend over here as well. So also pretty bullish, except for this reversal here. Okay, but we typically will follow the trend. Okay, now let's get into our analysis. Um, okay. Even though our weekly and daily time frames give us a bullish signal, this is kind of bearish because price is breaking out of the trend line. Okay, so we'll just keep that in mind, the mix in signals, in graphical signals. Okay, and that's why we use indicators, momentum indicators, as well as Fibonacci levels and graphical as well. Okay, so this is my first resistance. Let's see if there are any levels that are closer. Okay, I'll just leave my first support here at this swing low and then change this to second support because this level is closer to my first resistance. Okay. Okay, now let's look at our Fibonacci levels again. Okay, now I'm going to use my extension. So I'm looking at the above 100 levels. And you can see that my above 100 levels line up nicely with my first support and second support. Okay, so this is the V shape that I'm talking about. Okay, in this case, it's a bit inverted. It would be like that. Okay. Okay, I have a 38.2 and 23.6 level. Okay, that both line up nicely. Okay, so we already have this confluence area here. Okay, which is why we are seeing so much resistance here at this level. Yeah, I'm gonna put my second resistance here as well. Okay, but we can see that price is breaking out of our first resistance. So once it breaks out of this confluence area, we'll definitely see it approach our first support and the 127. And then subsequently, once it breaks out of that, we'll see it move towards the 161.8 because the 161.8 is, or our second support is also an area of confluence. Okay, we have the 38.2 and this 161.8, along with this second support, which, as I mentioned earlier, is an overlap level. Because you swing high here, swing high here, swing low there. Okay, so this is a confluence area, which means price is likely to be attracted to that area. Okay, now let's take a look at some indicators. Okay, Ichimoku is giving us bearish. MACD is also supporting our analysis. Let's look at RSI. Okay, RSI, let's see if we have a trend line. Okay, we do have a trend line on our RSI. Okay, so it supports our bearish signal as well. Okay, stochastic. Okay, stochastic isn't telling us much. Okay, we see that price crossover. Okay, which means just after price reversed. So you see this uptrend here. This is what I mean by looking for a crossover when you're looking at EMA and SMA, because a crossover would typically mean that price is likely to reverse its trend, which is what we saw here. Okay, so definitely moving downwards, especially with price moving below both of these indicators currently. So overall, all of our indicators that we've used support our analysis. Okay, let me know if you guys have any other questions or any requests. Okay, if there is nothing else, yeah, hi. Yeah, Demi Lola. Yeah, feel free to type your question in the chat.
Okay, can you hear me now? Can you hear me?
Yeah, hi.
Yeah, hi. The first resistance is a bit low,
Mhm.
like the swing low. The
Um,
swing low, first resistance,
yeah,
swing low.
is
How
what?
they
Sorry.
come to that
How did I come
swing
to the
low?
first resistance?
Yes, yes, on the swing low. I mean, resistance supposed to be at the top, not bottom.
It is kind of at the top if I just zoom in a bit. Price has recently broken under it. Can you see? And also because over here, right, at this, let me circle it here. Okay. Even though this is a support, right? So you would expect it to be a support, but price has broken under it. Okay, so once it breaks under, it becomes a pullback resistance because we're expecting price to pull back to it.
Okay.
Okay.
Because okay, the reason why you called it force resistance because it's the nearest it is the nearest I mean that's the last bottom, right?
Yes. It actually, okay, so a resistance, you're right, should be like this. So like at the peak, right? So you're right.
Exactly.
But in this case, because price has passed under it, so I'm actually using this as my level of reference. Because price has
Okay, in
passed
this
under.
case, okay, you mean once the price pass under it under the let me say the previous low, it's become a resistance level.
Yeah, so this is what we call a pullback resistance. Yeah. Okay, maybe I'll pull out last week's slides to show you what I mean, because we still have a bit of time. So we covered this last week. Okay, here. Okay, so a pullback is like this. So resistance, similar to what we saw earlier, here is my support, right? Once price breaks under it, it becomes a resistance, a pullback resistance.
Okay, pullback resistance. Okay, once price break the previous low, it becomes pullback resistance.
Yeah, and then once price reverses back to that, it then becomes an overlap. So like over here in this example here, it's a pullback, and then if you look at the GIF, once it returns to that level, it becomes an overlap. So yeah,
Overlap. Okay, once it's gone too far, it become overlap.
yes. Okay,
Okay,
does that answer your question?
yes, I grabbed. At least I'll further my analysis again. But I understand what you mean by what is it called?
Okay.
The force resistance. The force resistance, the line you drew, which is the pullback resistance. I understand it
Yeah.
now.
But yeah, it is a little bit close to where price is at. So I understand your concern as well.
All right. Okay.
Okay. Okay. If
So
there are no other questions, yeah, then that's all for today.
okay, the second resistance. Sorry, the second resistance is is clear. It's clear to me. I mean, the first resistance should be at the peak.
Oh yeah, you can place it here as well. It's just that I prefer my resistance and support levels not so far away from where price is currently at. But yeah, it can be at the peak as well.
Okay. But why did you bring the resistance to the edge of the is it the edge? Is that the edge or neck?
Because of the swing high here.
Yes.
Yeah,
So
and because
okay,
I
so
prefer it a little bit closer to my current price. So current price is here, so I prefer it slightly lower, closer to where my current price is. But because our analysis anyway is we're expecting it to go down, so you can place it here as well. Because technically our second resistance would be our stop loss in this case, right?
okay.
So you could place it here as well. It's entirely up to you.
Okay, we are actually going for in this case you're actually going for a sell, not buy. So which means the second resistance should be the maximum stop loss.
Yes.
The first resistance, sorry.
Will be our entry, our sell entry. Oh. Yeah, our sell entry. Then our first support would be our take profit. And then once price breaks that, then we can go in for another sell towards our second support. Yeah.
So how did you come about selling this chart?
Sorry?
How do you figure out sell in this chart?
How do I what? Sorry?
How do you figure out the charts? The market is going downward. How did you figure it out? I mean, it's going on the
Because
bearish.
yeah, because this ascending trend line, right? So we have an ascending trend line here, and price recently broke out of it. So it gives us a bearish signal. And then we also pulled out our indicators. So you see our MACD is giving us bearish signals. Ichimoku price is moving below the cloud. RSI is it's moving in this descending trend line. Yeah, if I use the EMA and SMA, it's also moving below the indicators. So all of our indicators and our graphical analysis all give us a bearish signal.
Okay. I mean, I can see the RSI. I can see the RSI, which is quite short for me. It is giving us a bearish, it is giving us a bearish tone, and the MAC, which is the MACD, correct?
Yes.
The MACD is also giving us a bearish trend as well.
Yeah.
But for the MACD, I'm not familiar with it. The one I'm familiar with is just the MA, which is the moving average.
Yeah.
I'm just familiar with the moving average.
Just the Ichimoku and the MACD are pretty easy to use. So yeah, you can just read up on those and use them in your trading as well. Pretty easy to use.
Yeah, I see. I will learn that as well. It's not part of I never use it for my analysis all the while because I use MA. That's what I'm being taught with. I use the moving average, but I think I will add RSI. Thank God for your analysis. I will add RSI to it. Let's continue. I will add RSI just to know my trend and to help.
Yeah.
The RSI is more I think it's friendly to be used.
Mm-hmm.
It's user friendly.
Yeah.
So and now I believe the RSI what is it called? The break on the chart. Sorry, I just hope I'm not just popping more question on you.
Sure.
Okay. I just want us to be on the same page. The RSI has confirmed the bearish trend. What else again confirm the bearish trend?
Okay, there are a lot of ways to use the RSI. Here I'm just looking for a trend line here. You can also look at so if you enable the lines, so the upper and lower lines. I mean here, the upper and middle bands. Right? If it's above the upper band, okay, let me make it bigger. So if it's above the upper band, it's oversold. So it suggests that price is gonna drop, as you can see here. If it's below the lower band, it means it's sorry. If it's above the upper band, that means it's overbought. So we can expect it to drop. If it's below the lower band, it's oversold. So we can expect it to go up. Okay, that's another way. Yeah, another way is by looking at divergences, but we have another webinar for that, so you can stay tuned for that as well. So we'll go more in depth because I don't really have the time to go in depth right now. But yeah, those are the three ways that you can use RSI.
Okay.
Okay.
What
That's
about
all the time that I have for you guys today. Thank you guys so much for joining me. Yeah, I hope you guys learned something and found this helpful. And I will see you guys again next Wednesday. Thanks, everyone. Bye.
all right, thank you. Bye.
Bye. Thanks, everyone.